Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. We've actually had a pretty interesting move over the last couple of days. Bitcoin has managed to get back above the 21-week EMA. So what we're going to do in this video is we're going to look at these prior comparisons, kind of see where we are. Did we actually get to the 21-week EMA by the weekly close? And sort of look to see prior examples when similar things happened. All right. So the first question is, well, where is the 20-week SMA and the 21-week EMA this week? All right. So as of this new week, the 21-week EMA is at around 61K. So we're currently about $1,400 above that. The 20-week SMA, though, is actually quite a bit higher at around 65.4K. So it's actually quite a bit higher. And so Bitcoin would need to go up another at least $3,000 or so at the time of this video to get back up to its 20-week moving average. So remember, we've said before that after you come back down here to these levels, we talked about this trend line previously, that you will likely get a bounce back up into the 20-week moving average. That's what you normally see. And in fact, we saw that thing happen even last time. You can see we had a move all the way back up to the 20-week SMA 2 weeks after, right? Actually, 2 weeks after the drop, we went all the way back up to the 20-week moving average. That would correspond to this week if it were to play out exactly how it played out in 2023. Now, you might say, well, Ben, in 2023, that was in August. We're now in July. But as I've mentioned, it seems like things are shifted by approximately 1 month, because back last year, we had sort of a local top in April, and then we had a bounce off the bull market support band in June. This time, the local top was in March, and then we had a bounce off the bull market support band in like late April, early May. So it kind of seems like it's shifted by approximately 1 month. In fact, the drop below the bull market support band this year occurred in July, whereas last year it occurred in August. So remember, last year, 2 weeks after dropping below the 20-week SMA, we ran back up to it, which would theoretically correspond to approximately this week if you take the bull market support band in its entirety. Technically speaking, we fell below the 20-week SMA back on the week of June 17th, so about a month ago. But if you're just looking at when we fell below the bull market support band in its entirety, if you include the 21-week EMA too, this would be 2 weeks since then. Now, we've also made the 2019 comparison, and I also think another valid comparison to make is 2013, because there's a lot of similarities there. But if you look at 2019, you can see that, 2 weeks after dropping below the bull market support band, right, 2 weeks after, we had a rally, and it only actually took us up just shy of the 21-week EMA. However, it was a substantial rally, even if it doesn't look like it. If you take sort of a price range here from the low to where that wick was, it was about a 15% move, which I think right now we're actually slightly above a 15% move. We might actually be at around a 17% move from this low, if I'm not mistaken. Yeah, about a 16 to 17% move. So it is a little bit more explosive than what we saw, shortly after that drop in 2019. And the big move that came in 2019 actually occurred about a month after falling below both the bull market support band. And in that case, if you wanted to compare it to sort of a month before falling below the 20-week SMA, then perhaps you're looking at something, like this. But that's not the only valid comparison. We've made the comparisons to 2019 as it relates to monetary policy. But one of the issues with the 2019 comparison, again, I think the 2019 comparison is valid, and it has been valid. And in fact, this entire move here has been very similar to the 2019 move, right? Despite all the criticism for it, it has followed it quite closely. Now, that doesn't mean it will continue to do so. In fact, we might see it deviate now, in fact. But I think that, if you went back to March when gold was breaking out, And we said that this could mark a top for Bitcoin for at least a little while, potentially until Q4 at the earliest. It was not a very, you know, agreed upon idea. It seemed like insane, I think, to a lot of people, the idea that Bitcoin would just stop 1 month before its halving and then just kind of cool off for a while. That was not seen as like something that I think made a lot of sense to a lot of people. And so I think you can look back at this and say, all right, well, at least till now, it has played out like 2019. The question is will it continue? Now, there's another comparison that I've made before that I think is a valid comparison as well, and that's the 2013 comparison. The reason why I say the 2013 comparison is valid is because you also had a series of higher or lower highs. Now, it's slightly different because the high in 2013 actually occurred in April, not in March. And then you had a low that occurred in April as well. So, there are some differences to it. But you'll notice that a top in April, a lower high a couple weeks later, and then a lower high in May, and it kept being a lower high. And then you had a low the first week of July, right? And I was actually watching this at the weekly close because if you look at 2013 closely, what you'll notice is you had a weekly candle where the low was the week of July 1st. More impressively, in terms of this comparison, I have to show this because it's actually even more impressive than just saying the week of July 1st. Bitcoin found this bottom the day of July 5th. It was on July 5th that Bitcoin found that low. And what ended up happening was it rallied back up to above the 20-week moving average by July 12th. Now, we're already beyond July 12th. It's actually been a little bit, the price action was a little bit more muted compared to 2013. Because if you look at 2013, Bitcoin, let me just pull up the 200-day moving average here. So let me go change this to 200-day SMA. Bitcoin actually got back above its 200-day SMA almost immediately after falling below it on July 5th. You see that? I mean, it basically got right back above it, and then went right back up to the 20-week SMA. But remember, it found that low on July 5th. And then if you go to 2024, guess when it found the low, right? It was on July 5th on a Friday. It was on a Friday back then too. But there were some differences because back then it only took 2 days for Bitcoin to get back above its 200-day SMA. This time it actually took about a week, right? Last in 2013, it was already back up to the 20-week SMA by July 12th. It's now July 15th, and we're still not there. So it's slightly different, especially considering that this time we had the local top in March. Back then it was in April. And by the way, back then too, while it might not look like it, I mean, Bitcoin had a pretty aggressive drop after that first top. Now, maybe you would argue diminished volatility, which, I think a lot of people could get on board with. But there are some similar comparisons, right? You had a series of lower highs going into the summer. You found a low in July, right below the 200-day SMA, and then Bitcoin sort of slowly bounced back up to the trend line, got rejected, and then made its way. But what you'll notice is that while it went back up, it did not put in new highs. The rally to new highs did not begin until October, right? So we basically saw Bitcoin, get back above it got back above the 21-week EMA almost immediately, but then it wrestled with the 20-week SMA for several weeks. It finally got above it, and then it came back down to it, sort of early October and held it as support. So, while it had a local top here in April, it didn't really get going again until Q4. And that's why I've said many, many times before is that at the earliest, I would expect it for new all-time highs. I would expect Q4 at the earliest. Now, I could be wrong, right? I mean, it's not like it's impossible for Bitcoin to rally, a little over $10,000 from the current price. It's not like it has to take, 2 months or something for that to happen, or, 2.5 months. But it's possible, right? And if it follows what happened in 2013, that's how long it would take, right? It would, maybe rally back up to the mid 60s and then just kind of hang out there for a few weeks and then get, picked back up in Q4 of of this year. And if it does that, it would play out in a very similar fashion to what we saw in 2013, where you get a top in April and then another top in December, except this time it was in March. So, maybe it shifted forward by 1 month and it ends up being, November or something. But it's kind of an interesting thing to look at. And actually, this is something I was talking about previously back in March, is that, even if you think there's going to be another rally in Q4, which again, if it follows 2013, that's what there would be. Even in those years where there were Q4 rallies, as we saw, you still had this unfavorable seasonality in the summer, right? So if you were to go back and look at just year-to-date ROI of Bitcoin in years where Bitcoin had, an explosive Q4 rally, you have to think, okay, well, what years were those? Your post-halving years, right? Your 2017, your 2013, and even 2021, even though it was only a slightly higher high, you still had a Q4 rally. In all of those years, you saw Bitcoin sort of fall off into the summer, and you can see that happen in 2024 as well, right? It sort of fell off into the summer months. And so I go back and I look at that a lot and I'm like, well, it seems kind of similar. So if it were to play out like prior post halving years, and you would expect it to try to pick back up in the August September timeframe, but not really gear up to new all-time highs in the August September timeframe, and then make its run starting in October. Okay? Make its run starting in October, which would be similar to what we saw back in 2013. Now, the reason why I make the comparison to post-halving years, one of the reasons is if you actually average out 2017 and 2021, and you look at what happened with Bitcoin back then and you compare it to 2024, it kind of seems like a close match. It's not perfect, but it seems somewhat similar, right? Somewhat similar. But I think what is also somewhat telling is if you average out prior halving years, like election years, you can see that 2023 looked closer to a halving year than it did a post-halving year. Right? You can see that year-to-date returns in 2023 were actually really close to halving years. And that's why I've made the comparison, well, what if 2024 is actually playing out like a post-halving year, where instead of looking at halving years, you maybe look at post-halving years. I think there could be some validity to that as well. But there's also this other thing that I can't really shake, and that's the idea that we've always seen Bitcoin peak in Q4 of the post-halving year. That's what we've historically seen. Now, you could have a translated peak, a left translated peak. We've been talking about that for a long time. You could have a left translated peak where the top actually occurs, a year before it normally does. And I wouldn't necessarily be surprised to see something like that, but that it still hasn't played out just yet, right? Again, if you're not familiar with what I'm talking about, this was 2013. That peak was 2013. This peak here was 2017, and then this peak over here was 2021. And so, yeah, it's possible it could play out in the sense that, you have a rally that begins, that takes out the highs in Q4, and then goes to new all-time highs, and, everyone gets excited as we go into the end of the year. We could see something like that playing out, right? Something like that could play out, especially if it follows 2013. Now, there is one counterpoint to that idea that I think we should also keep in the back of our minds, and that is, well, one of the things to consider is that Bitcoin has always peaked in Q4 of the post-halving year, right? But the only way that you're going to really see that, I think, would be that if the summer lull extends beyond the summer, kind of like what happened in 2019, as those rate cuts finally arrived, right? So if a rate cut arrives in September, which is if you go look at those Fed Watch tools, CME Fed Watch tool, if you look at probabilities, the current probability for rate cut in September, according to this, is 88%. So, I mean, if the market does sell off into rate cuts, and you do get some type of a 2019 drop by Bitcoin where the summer lull extends longer, then, you could see it play out in sort of a similar fashion. And one thing I've thought about, I do think Q4 is going to be explosive for Bitcoin in either direction. It's either going to be, in my opinion, right? My opinion, it's either going to be aggressively up or aggressively down. Um, you might say, you might roll your eyes, you're like, well, how does that help me? Guys, for me, as I've said for basically since 2022 began, for me, I don't really know exactly where Bitcoin's going to go on its USD pair, but I just keep my portfolio Bitcoin heavy because if the market does go up, it's only because Bitcoin's taking it. It's not because the altcoin market is taking Bitcoin. It's because Bitcoin's taking the altcoin market. So I just stick with Bitcoin over the altcoin market because Bitcoin should lead until looser monetary policy arrives, right? So, but there's this idea, right, that a lot of times when you do get these explosive rallies, they can last about a year, right? Even last cycle, it went from basically March of 2020 to March of 2021, maybe a little bit longer. So, if you do get, if you do get, a rally that sort of extends out into Q4 and we go to new all-time highs in Q4, then that would actually follow essentially what we saw happen with the QQQ after, back in the .com era, right? If you go look at the QQQ back over here, you can see that it launched right here in March, and then the market topped out exactly 1 year later, right? In March of the following year. So it took approximately 1 year. And what's fascinating is when the QQQ launched, it launched at 48. And then in August, it had a drop to around 52.9, which is similar to where Bitcoin just dropped, right? It just dropped to around 53.5. But again, it didn't occur until August. And also note, though, that it didn't go as high as 73, which is where Bitcoin went. I mean, it took until, really, it took all the way until November for the QQQ to even get to 73. And again, it launched to 48. That's why I'm making a comparison to Bitcoin, because when Bitcoin's ETF launched, it launched at 48K. And what's crazy about this comparison is that it went all the way up to 120, and then it fell all the way down to 20. Or actually fell below 20, right? It fell all the way down to just below 20, which would be kind of a scary drop. So I don't really know if that's the most likely outcome, but I will say this, there do exist other scenarios, right, where it doesn't have to follow what the QQQ did. You could get a scenario where it looks like it's playing out like 2013, right? It looks like it's gearing up into October, and it looks like, and everyone's loaded up for it. And then maybe you get some type of correction, right, in Q4, maybe on some type of uninverted yield curve or something. And then it scares everyone off, kind of like what we had back over here. There's always something, right? I don't know. Every single time there's an excuse for the sell-off. And then after the sell-off, then you get a rally into Q4 of the post-halving year, lasts about a year. You get a peak when you normally do. So I don't really know. I mean, I really don't know which one's going to play out. But I do think that you could make the case either way. You could make the case for a left translated peak. You could also make the case for a normal peak. You could also make a case for a left translated peak where the peak could unfortunately already be in, right? I mean, I think we should always consider all outcomes. But I think in terms of trying to distinguish, is it more like 2019? Is it more like 2013? The unfortunate truth is it's 2024. It's not going to play out like either 2019 or 2013. I think it would make sense to expect that there will be some differences. It's easy to look at charts and say, well, it did this last time, therefore it's going to do the exact same thing. But unfortunately, I don't think you can look at any prior cycle and say that this is exactly what happened, right? And the people that would say you could have probably been saying it all year, and we're saying, back in March why Bitcoin was going to immediately go higher because there was going to be a supply shock after the Bitcoin halving, and instead we just sold off. So you have to be careful about making those comparisons and assuming they're going to play out in the exact same way, because the reality is they're probably not, right? But in trying to make the comparison, is it a 2013 or is it a 2019? Look at one of the differences here. In 2013, after the low, right? Or sorry, this was 2014, right? In 2013, after the low, Bitcoin in July, right? Bitcoin did not get that much of a pullback after that, right? I mean, it pulled back a little bit back here, kind of back to where you had this low right here, right? But it basically rallied back up to the 20-week SMA, and then it had a pullback. If it does that, where it only is a light pullback, then perhaps it is more similar to 2013, right? You see what I'm saying? Where you have sort of this pullback here. You have this pullback right here, but it only really pulls it back to kind of this test right there. There are some differences in 2013 and 2024. I mean, in 2013, while it was lower highs, you also were putting in, for the most part, you were putting in these higher lows. I mean, like the July low was higher than the April low in 2013. But in 2024, the July low was lower than, than the April low, right? So it's not exactly the same. But if it were to play out like 2013, right, which is a big if, but if it were, then you would, and you get a rally back up to the 20-week SMA, and then you get a pullback, then you would expect it to pull back to around the 21-week EMA, right? Around the 21-week EMA. And again, it would probably be a week or two from now if it were to play out like that, like 2013. If it were to play out like 2019, you would not expect it to hold support at the 21-week EMA whenever it's tested, right? So what happened in 2019 is you had a couple of rallies, right? But when you had the rally back to the 20-week SMA, you had a pullback to the 21-week EMA. You held support in the short term, but then it fell back down and put in a lower low, right? And you actually had a series of these lower lows where you basically, Bitcoin would sort of fall. It would put in a low. It would put in a low. But instead of going back up to the top of the range, it would then put a lower low first, right? It did it a couple times, right here and then there again. So you had a series of lower highs, right? You had these series of lower highs, right? And you had a series of lower lows. And, occasionally you would tag the top of the trend line a couple of times before going back down. And so that's what happened in 2019, right? You would tag the bottom of the channel and you could get a nice rally, right? I mean, this was still a nice rally. It was about a 15% move to the upside, but it still came back down and put in a slightly lower low before going back up to the top of the trend line. So if you go back and look now at 2024, if we go look over here at 2024, you can kind of see we've developed a similar trend line, right? We had this trend line at the bottom. We also had this trend line at the top. And in the same way as 2019, right, when we tagged the top of the trend line, there are times where you kind of tagged it a couple times before really going back all the way down to the bottom. And now we just tagged the bottom. But so far, when we've tagged the bottom, we've only really tagged it, once. So I think this is the test, right? This is the test. When there's a pullback, whether it's now, because again, it's been about the same percent move, maybe even a little bit more than 2019. It's been about the same percent move. When there's a pullback, does it hold support at the 21-week EMA, right, at around 61K or whatever it is when it pulls back? Or does it go back down to the bottom of the trend line and put in a slightly lower low? If it goes and puts in a slightly lower low, then it's more similar to 2019. If, on the other hand, it holds support at the 21-week EMA, then it's more similar to 2013, right? So those are some of the nuances I think to sort of be aware of. Again, for me, I can confidently say I have no idea how it's actually going to play out, right? But as I've said, really since 2022 began, my crypto portfolio is just going to remain Bitcoin heavy until looser monetary policy arrives, right? Because it gives you exposure to the upside, minimizes your downside risk, right? It's hard to know exactly how this thing's going to play out, right? I mean, you could have a scenario where you get a Q4 rally and then the market sells off, kind of following that, kind of like 2013. Or you could get a scenario where you get a drop in Q4 and then the market goes up in 2025. But in 2025, maybe altcoins would lead instead of Bitcoin, perhaps because looser monetary policy has arrived. So again, I mean, it's really interesting because I feel like you can find kind of similarities in both, right? It's easy to find similarities in both. And I really don't know which one is sort of going to win out at the end of the day. And my guess is when we look back at this cycle in 10 years, we're going to say, oh, it was different than 2019 and it was different than 2013. It was 2024. And in the, in the next cycle, when we're out in like 2028 and we're making comparisons to 2024, it's probably going to be slightly different than, again, the other years that we're looking at. And we might use it as a way to say, all right, well, this could theoretically happen, so be prepared for it, but maybe it'll play out, a slightly different way. So these are all things that I think are important. You should remember it's a market, it's going to evolve. It's not going to play. And again, one thing I even I have to tell myself this a lot: trade the market that you have, not the market that you want. I think that's sort of the reality of investing. Trade the market that you have, not the one that you want. I think a lot of people, want certain things to play out in very specific ways, and I'm guilty of that probably more than a lot of you are. But it's just something I've had to sort of learn to deal with. And in this case, right, in cases like this, fortunately, at least, while I have underestimated some of the potential in some of the alts, at least I've been on the right side of the Bitcoin dominance move, and I can at least confidently look back and say, look, I mean, it made a lot more sense to be in Bitcoin over most of these altcoins over the last few years, and I think that's fully expressed if you look at a lot of the Satoshi valuations of these altcoins, and looking at one of the nice things about these little rallies that you're getting by Bitcoin, and we've talked about this for a long time, is that Bitcoin rallies allow Bitcoin dominance to go up too. Which is funny because over the last several weeks, we've seen Bitcoin rallies. We've seen a lot of the Bitcoin rallies cause dominance to go up, and we've seen Bitcoin dumps cause dominance to go up, right? It's kind of one of those things where, as I've said for like 3 years now, Bitcoin dominance goes up no matter the direction of Bitcoin USD. And again, I know that's like a tiresome thing to hear, and you've heard it 1,000 times, but it's like, guys, until we get looser monetary policy, that's likely the scenario. And I think a lot of people like look at it and they're like, well, we're definitely going to have a rate cut in July, or we're definitely going to have one in September. We're definitely going to have one. But guys, a lot of people were saying the same thing a year ago. And honestly, I mean, I am under the impression we probably will have a rate cut this year. My guess is September is going to be the most likely time frame at this point. But I think what's gotten a lot of people into trouble over the last couple of years with as it pertains to a lot of altcoins is that they keep thinking that the rate cuts are going to be here, and then they just keep not coming. And then people keep thinking that dominance is going to fall off a cliff, and it just keeps not doing that because it's like a game of chicken, like when they're, the degens want monetary policy to loosen up. And so they front run it. They say, all right, well, rate cuts are coming. So they bid up all the memes. And I'm not just referring to crypto. I'm also talking about in stocks as well. But then that leads to the wealth effect, which puts upward pressure on inflation. It means the Fed can't cut, So it's like a game of chicken. The taming the animal spirits, but also, wanting to tame the animal spirits, but also wanting to cut. And I think it's just hard for the Fed because it's a difficult game. And this is why dealing with inflation is such a difficult issue, because it's hard to get it to go away because it's hard to tame animal spirits. And I mean, I think that's the sort of the reality of all of this. It's just really hard to get it to go away. And, you look at it on paper in the 1970s or the 1940s, you're like, well, this is what they should have done. Think about it right now. I mean, think about over the last year. Think about over the last 2 to 3 years, how many people have been screaming from the rooftops that we need rate cuts. And yet real GDP is still positive. And, I mean, just think about it, right? It's hard to slow down the U.S. economy. It's not that it can't be done. It's just that it takes a lot to slow it down. And the rate at which it's been going, I mean, it has been slowing down, but it's still positive, right? It's not expanding as much as it was previously, but it is just something to keep in mind that it's not the easiest task for the Federal Reserve, because, and again, by the time you get out to 2025, imagine the demand for looser monetary policy and QE. I mean, it's just going to grow and grow and grow the longer it takes. So yeah, those are my views here. It's a nice move back up by Bitcoin. It's back above the 21-week EMA. I think the one thing one thing to look at as well is that, we are back above the 21-week EMA, but technically speaking, we have not had a weekly close above it, right? It came really, really close but the bulls were unable to get a weekly close above the 21-week EMA, which, I mean, it's a slight discrepancy when you actually look at 2013. And I don't know if maybe it's being a little bit too, like, nitpicky, but if you look at the 21-week EMA back in 2013, the following week, we actually closed above it. And the following week, we had a wick above the 20-week SMA that following week. You see that? So it's a bit stronger of a reaction to get back above the 21-week EMA. It was a 23% move, excluding the wick, right? Excluding, the downside wick and the upside wick just from weekly open to weekly close. It was a 23% move. It got back above the 21-week EMA. If you look this cycle, you look at 2024, it was a 8 to 9% move, right? But the bulls were unable to close above the 21-week EMA. So, like, that's like a slight difference. I'm not sure how important it is, but it is a slight difference between 2024 and 2013. So I just want to draw your attention to that. So let's see what happens this week with Bitcoin. Does it stay above the 21-week EMA? Keep in mind that if it is playing out like 2013, one thing to note is that the following week, after it had this explosive move up, Bitcoin then actually dropped that week. It did have a wick higher again, but it actually was, in fact, a red week that following week. So, that would be something to keep in mind. You might not actually get your answer to whether this is 2013 or 2019, or, what is it more similar to. You might not get your answer until the following week. You might not get it until the week of July 22nd is a possibility. So let's see what happens. And we'll see if this ends up playing more out like, if it ends up playing out more like 2019, or if it ends up playing out more like 2013. My guess is it's going to play out like 2024, meaning it's probably going to be somewhat different from both of them, but perhaps we can take something from both of them and try to figure out, all right, what is the most likely outcome? And we'll take it from there. But anyways, if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. And again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.